Hi everyone. In this video we're going to look at homework problem 4.2, and again, as I mentioned in homework problem 4.1, I've got a snip here, a little screenshot of the information from the physical packet that you'd have in paper form. I'll leave this snip here in the Excel if you want to look at that, but just as a reminder that the problem is also within your paper packet for homework problem 4.2. Okay, I'm going to go a little bit quicker on this one than I did on homework problem 4.1 in terms of the video. A lot of the concepts that we talked about in 4.1 are just going to be carried over to this problem as well. So we'll just continue to go a little bit faster as we proceed, and hopefully it'll make sense. And if you need to slow down, obviously rewind the video, etc., or go back and watch homework problem 4.1 if there's any concepts that I went a little fast on that I might have discussed in that problem a little bit in more detail. Okay, so let's start out. I'm just going to put 2025 here and then go into the various journal entries. So on the 2nd of April, we purchased $1,200 of goods for resale from Supplier Co. with terms of 210 net 45. So I'm going to go here. I have the answer key from that video and from my work earlier, and I'm going to copy this over. If you all have your 4.1 finished, feel free to do the same. And it's just things like that, just make it a little bit easier to work through, because again, like I said, you'll see a lot of similar problems. So this one was $1,200 of purchase. We'll update the name to Supplier Co. and it's 210 net 45, not 30. Invoice 597. And we're good to go. Okay, on April 3rd, we had a sale of goods to a certain customer for this amount of money. This is the cost of goods sold. So again, I'm going to go back and steal some information from a sales transaction. I'm going to break it out into 2 different journal entries again. That's not necessary. You could do 1 journal entry with 4 lines. But again, I kind of like doing it this way just to show you a little clearer the 2 different components. Okay, so I'm going to update our customer co. I'm going to update our title here. So it was 2.5 net 30 on this one. And I'm going to use my same kind of formatting there with the slash like we did above. And it was invoice. Let's see, did we do? Okay. We'll leave it at that. I'm going to put the same description in both sides. Our accounts receivable in this instance was $2,200. That's what we sold the goods for. And the cost of goods sold was $1,100. Link that in. Okay, and same journal entries. Accounts receivable goes up, sales revenue goes up, cost of goods sold expense goes up, and inventory goes down. Okay, on April 4th, we purchased $1,800 of merchandise, and this one tells us it's purchased FOB shipping point and from vendor co. with certain terms. And let's see, anything else to note here? No, okay, that's about it. So I'm going to steal this journal entry above. It's, step 1 is we just look to see that we have a normal purchase of inventory and accounts payable kind of transaction going on. So $1,800 is what we're paying for the merchandise, and we're on vendor co. It says 110 net 30. So we'll update the terms here. Invoice 229. Okay. And then we have a secondary part of this transaction to pay for the freight costs. And again, remember, we're going to record our incoming freight as inventory. This one says we paid it, so we're going to have cash instead of accounts payable. And let's just put in the check number 597, and we'll say, I guess this is also, it's not just the shipping, but it's also the insurance, so freight and insurance. And the insurance part of it kind of comes into play too, because we're doing shipping point. So this means we're responsible for the inventory when it leaves the shipping dock at the customer's location, as opposed to FOB destination, where it would not be our responsibility essentially until it arrived at the destination. So something to keep in mind there. Okay, on April 10th, we returned some goods to Vendor Co. and received a credit memo for $100. So now we're going to do a reversal of our entry above, essentially, and we're going to reduce our accounts payable. So this is related up here to Vendor Co. And I'm just going to put this, and we'll just say it's a return. And so we've got accounts payable going down, and let's see, what did we have here? Inventory reducing as well, because we're sending this inventory back, and it was $100. And we'll say CM for credit memo, which number? 83. Whoop. There we go. Okay, and that was April 10th. Now on April 11th, we have a sale of merchandise here. So again, let's take our sales journal entries and just kind of use that as a template. Paste those in, and pull this down with us so we can see as we go. This is on the 11th. And we sold this for $2,400, and the cost of goods sold was $600. And so all we really need to do is update our memo here, and we'll say, or our explanation, we'll say this was Shasta Company, and it's got 2.5 net 30, so that's the same. Shasta Company. Great. All right, so got that done. Now we paid Vendor Co. with check number 598. So let's take a look at our payment here. And so we can look back and say Vendor Co. purchase happened on April 4th, and we're making this payment on April 12th. So that's 8 days later. And so we can take a 1% discount as long as we pay within 10 days. So we're paying 8 days later. That's within 10 days. So we're going to take a discount for the payment. So I'm going to go over and steal one of my earlier entries from 4.1 where I took a discount for payment. And again, that looks like this one here. Just using Excel to make little efficiencies. But then we'll edit and update. So that's on the 12th. Let's delete out our links there. We want to say check number 598. And this reflects back up to this this whole purchase above essentially. So the accounts payable that is going to be reduced here when we make our payment is going to be 1,800. So that was originally 1,800, and then minus 100 because we returned a portion. So the residual balance that we're reducing our accounts payable by is $1,700 to get that to go to 0. And then, like we just mentioned, we get to take our discount, which is 1%, looks like. Make sure I got that in right. Vendor Co. purchased, 1%. So we could say, we'll do it a little different on 4.1. We started with cash. Let's do the inventory. Let's do the discount first. So we'll just take that times 0.01. Whoop, that didn't work, times 0.01. So $17 discount, which is reflected as a reduction in the inventory value. And then we can take the difference between the two to show what our cash payment is actually going to be. So we get to pay less cash because we took a discount. And since we're paying less cash, then the value of the inventory is just worth what we paid for it. So it's lower than it would otherwise be if we didn't take the discount. Okay, that was the 12th. On the 16th, we received $800 of goods back from Shasta Co. and we issued a memo. And so that reflects back to this sale here, or these two entries for the sale. And we're going to be receiving back some, some of the goods here, not all of them, but some of them. And this is on the 16th. So again, I like to kind of break it out into two separate entries. And step one, I like to reduce our accounts receivable. So it's kind of the opposite there, as we originally increased by the 2,400. Now we're going to decrease by 800 because they returned $800 worth of materials or inventory. So remember that we're not just going to reduce sales revenue like we might here. We're not just going to reverse that immediately. We could do that, which would have the kind of a similar result. But remember, we want to keep the revenue separate from the returns and allowances so that we can analyze those amounts more easily. So we're going to do sales, returns, and allowances. And that's going to be our contra revenue. And we'll just leave this on and say return, just to add a little bit of additional information. Okay, and then for the additional part of it, as far as the inventory coming back and the cost of goods sold being reversed, it is basically just a complete reversal of that journal entry. And here we need to do a little math, I think. So if you recall above, we had $2,400 of merchandise sold and the cost of goods sold. So this is our revenue, this is our COGS. And then if we take, I always do that, putting the revenue on the top, but I guess it makes more sense if we're doing a division to put it in there, right? So our cost of goods sold per dollar of revenue is 0.25. And so if we know that, we can take our total amount of revenue returned and figure out that the cost of goods sold was $200 returned. So again, sometimes you'll just be given that information, but this problem makes us kind of figure that out as we go. Alrighty, so that was the 16th. I'm going to keep pulling this down here. Now on the 18th, we paid Supplier Co. for invoice 597, dated 4/2. And so if we look back on 4/2, we could have got a 2% discount if we paid by the 12th, it looks like 10 days later. But we're paying on the 24th, so we're not taking the discount. And so that's just going to be accounts payable reduction and cash. And then again, that was from dated, it tells us on the 2nd. We're just going to copy this explanation down there. And the amount that it was $1,200. So again, no discount on this one because it was too late, but that's okay. We made the payment and paid in full. Okay, so that is good. And then our final, make sure I got everything here. Wait, did I do the wrong date? I did. That was the 18th, sorry. Now on the 24th, we received payment from Shasta Company from 411 sale and 416 credit memo. So let's go back and look at those. So on we made this sale, and if they paid us within 5 days, we would provide a 2% discount, but they're paying us on the 24th, so that's 13 days later, so they don't get to take a discount. So we're just going to get rid of this accounts receivable here. I'm just going to copy this to use it as a template. And we are receiving the cash and reducing the accounts receivable, just like we have learned lots of times. I'm just going to put the explanation there. And now the only thing we really need to think about is, ensure that we're receiving, oops, I spelled that wrong. We're receiving the right amount. What is our outstanding receivable related to this sale? And so we have to go back up and say, okay, it was 2,400, but then they made a return of 800. So let's subtract that out. So it's going to be 1,600 left over that they owe us at that point. And that will eliminate our receivable. And again, we're not offering the discount, they're paying the whole amount from the sale because they did not pay within the time frame. Okay, and then on April 30th, we received payment from Customer Co. for goods on 4/3. So this again was 5 days later. So that would have been April 8th. We're way past that on April 30th. So again, no discount. And this was Customer Co. And I don't think we had any other returns from them. Yeah, that was the only thing related to them. This one, remember, we had to take into account that there was a return. But on this one, it's just the full sale. And that was, where am I? That was this one, Customer Co. Sale, accounts receivable. Put in the explanation. And that is the end of all of our transactions. So hopefully that was a little easier than maybe going through it the first time. And I got through that one definitely about half the time as the first. So if you had any residual questions on anything, again, do a rewind, watch it twice, or go back to 4.1 and look for a similar problem there where I might have explained it a little more in detail, or reach out as always, and I can help you out if you need any further instructions. So thanks everybody, appreciate it. We'll see you in the next video. Bye.